Hey everyone, Brian Pintar here with your weekly market update. So, Kevin Warsh, the new Fed chair, had his first meeting this week, taking over for Jerome Powell. And obviously, they kept interest rates the same. The other Fed chairs, when they did the dot plot, which dots out future interest rate increases or decreases, for the first time in a couple of years, there's a higher probability of a rate increase as opposed to a decrease. The main reason being is that inflation now is at 4.3%, which is very high. You cannot cut interest rates into that high of inflation or increasing inflation because that would create stagflation. So stagflation is when you have no employment growth and increase in inflation. And you never want to be in that situation because it's very difficult to get out of. The one thing with Kevin Warsh that still stands out to me, and in the comment section below on YouTube here, you can read all of this in more detail. But the one thing that really stands out to me with Kevin Warsh is he still wants to trim the balance sheet, which means he wants to sell off the government's ownings of mortgage-backed securities and treasuries. When you do that, that would actually increase mortgage rates. Since mortgages and home ownership is responsible for about 40% of the total domestic GDP, cutting or increasing mortgage rates in this market to me is like, I don't understand what the logic would be. We've used quantitative easing, which is what increased the balance sheets to actually bring down interest rates. That's how we got out of the 2008, 2009 Great Recession. It's how we got through COVID. It's the number one tool in the toolbox for the Fed. Warsh's response is that he doesn't want the government to be involved in the market, which, yeah, I agreed with that prior to 2008. But that genie's out of the bottle. It's not going back in. It's really the only tool I see the Fed having. So I'm going to be very curious to see what he does with that. Last note on the very bottom of this, I made a note. There's a lot of people with escrow shortages now. When you're getting your mortgage statements, your mortgage payments are taking a big jump up. And give me a call. I'll be able to help you with that. Just give you some ideas. Another thing is cash out refinances or rate and term refinances. They used to be limited to $2,500 cash back, but now it's unlimited, or it's 1% of the loan amount. So if you have a $700,000 loan, you get $7,000 back without having it considered a cash out refinance. Combine that with skipping a mortgage payment, getting an escrow refund, basically reestablishing your escrows. There could be massive savings through refinancing right now and massive wealth creation. So call me on that. I'm going to get another email out very specifically to the 1% rule on refinancing and the escrow shortage. Hope you have a great weekend. Call me anytime. Thanks. Bye.